This video will look at Crane Company through the lens of FastGraphs, the Fundamental Analyzer software tool. Crane is the manufacturer of highly engineered industrial products. As you can see from the FastGraph, looking at the orange earning justified valuation line, the company has had a pretty good record of earnings over the years with some cyclicality in between. From the years 1998 going through calendar year 2002, you can see that earnings fell. Notice monthly closing stock prices have been very volatile over the years, but also notice how they have followed and tracked earnings. During the Great Recession of 2008 and 2009, Crane had two pretty strong drops in earnings, but what we really want to point out with this particular video is how the stock price dramatically overreacted to the earnings drops, creating one of the lowest valuations in the history of this company on this period of time that we're measuring. Of course, once earnings began to recover as the recession ended, stock price went on a very rapid ascent, rising from the mid-teens all the way up into the 50s, currently trading in the 40s. Crane currently trades at 15.9 times earnings, offers a 1.9% dividend yield. Their historical earnings growth has averaged 5.9%, and the company has about 29% debt to equity ratio. When you look at the performance associated with this graph, what we really want to focus on is how the 5.9% earnings growth rate translates into a very similar closing annualized rate of return. The almost 6% earnings growth translated into approximately 6% shareholder returns. Add dividends into the equation and the return increases up to about 7.4%. We also want to point out that Crane has paid a steady dividend over the years, although they did freeze it from the period 1999 through calendar year 2004, which was the period where earnings were weak and falling. But going right through the recession, the company was able to continue to increase their dividend even during the years 2008, the recessionary years 2008 and 2009. But Crane shareholders were offered a return very consistent with the company's operating results. However, the most important takeaway from this video is the idea of how dramatically the company's stock price recovered as earnings recovered coming out of the recession. And you can see here, looking at it by shortening the time frame to the 3 years, as they came out of the recession, which ended in 2009, earnings growth was good in 2010, averaging 22%, and expected to average another 23% this year. But what's happened since 12/31/2008 is the Crane shareholders have enjoyed a 48.5% compounded rate of return. Add dividends in, and their total annualized rate of return is over 50% a year, in contrast to the S&P that's averaged about 17%.